Hi, welcome to the Market Alert for Wednesday, the 10th of August 2022. So stocks and bonds tumble as rate hike odds rise. The market's pricing in more tightening in the short term and then more easing after recession hits. Well, it's CPI today, isn't it? As this headline says here that US stocks declined on the eve of CPI amid further tech sector woes, and also this one, stocks hit on more chip warnings ahead of US CPI. So even if today's CPI numbers, which is forecast at 0.2, is spot on or lower, then down the line we've still got problems in the semiconductor area and also in the supply chains as well. But the reason for this massive drop, apparently I've done a bit of research overnight, and that's because of the drop in the price of crude oil should take the edge off inflation. That doesn't mean to say it's over, but certainly show that at the moment there's a bit of an easing in that particular sector, not across the board. But if it is the case, then we're going to see the Dow and all other markets move strongly to the upside, despite the fact that yesterday the market was quiet sideways and currently trading below the 5-bar moving average. If those CPI numbers come out at 0.2, that gives or takes the pressure off the Fed and will allow them to ease on the rates sooner rather than later. So it will be bullish if it comes out at that level, but we're going to have to wait until 1:30 p.m. to actually find out. So this is a bit of a whistle-stop tour really this morning, because obviously the market for the last 2 days has done not a lot and is trading sideways to lower, just treading water, waiting for these numbers. So a quick look here, we've got the Dow currently trading below the 5-bar moving average, as I've just said, and yesterday in the 30-minute chart you can see how the market's waiting, and on occasions like this you're just better off standing aside and waiting for the volatility to return and try and resist the temptation. And in the German DAX you can see this closing below the 5-bar moving average. As we've indicated, from a technical analysis point of view, the market's overbought and has had a massive run of over 1,000 points to the upside, stopping at 62% retracement, and now we're seeing a bit of selling coming into the market. Again, this market, the same as all other markets, is waiting for those CPI numbers today. Market trading down to 62% retracement currently on the overnight there. 30-minute DAX shows a bit of a bigger move to the downside with European issues yesterday, taking out the low as well, but trading down to the psychological, just above the psychological level of 13,500 there. But stuck it in a range once the Dow opened. There was just a bit of a sell-off in the European markets of 100 points to begin with, and then that was it. The market just traded sideways as soon as the US opened, and you can see this in the 5-minute chart. It was a slow grind to the downside and then sideways and then a bit further sell-off, and you'll see there the market then just stuck in that sideways range, and overnight prices above yesterday's low for the German DAX at the moment. In the S&P, similar to the Dow, just a bit more weaker, market back below the 89% from here to here, and we've also got a red bar there, but that doesn't mean to say the market's going to down. You can have several days in an up move where the market consolidates and then moves back to the upside. Like I say, it's all down to that 0.2% number. If it's higher, if it comes out at 1%, then the market will sell off initially, that's for sure. And the 30-minute of the S&P, again you can see how sideways this was yesterday. FTSE 100 even quieter, trapped between the high and the low of Monday there, an inside bar, and there you can see barely moving during yesterday's trading session. And in the currencies, also sideways. As I mentioned yesterday, interest rate sensitive. The yen is stuck in a sideways range. 30-minute chart shows this as well. Barely 80 points yesterday from low to high. And then overnight you can see how quiet it's been, and this is going to be the same for the morning. The pound also stuck in the sideways range at 89% retracement. In the 30-minute chart, we had a bit of a move to the upside, about 25 points, and then that was it. Some news there. I don't know what that was. What time was that? 4 o'clock yesterday afternoon, and then the market down. So that's going to be US related. And then finally in the metals, the silver market stopping at the 78% retracement. No surprise there. Down yesterday, down on the overnight, because if the 0.2% comes out, as is the case, then that takes the pressure off silver, and you will see a big bar to the downside. If it comes out higher, it will support the metals. 30-minute chart of silver, you can see this yesterday. We're back to the 1 p.m. squeeze, which kicked off here. You can see that market down and also taking out yesterday's low already. In the gold market, stronger than silver at the moment. You can see this still trading above the 50 EMA there. If we just have a look at the gold-silver ratio, you will see that the gold-silver ratio is moving back to the upside to 87. Yesterday, as silver declined, gold stayed strong, and overnight the same thing with silver taking out the low already. This is putting pressure on the gold-silver ratio as gold maintains, as you can see there, that support. And in the 30-minute chart, you'll see moving to the upside where silver moved to the downside. Way off the low for gold, unlike silver, which has already taken this out. The dollar will also be waiting for the inflation numbers, very important, because it's going to determine whether rates are going to go up or not. If the numbers come out greater than forecast and there's a prospect of a 75 basis point increase in rates, then you will see the dollar move to the upside, the metal slammed, and vice versa. And finally, crude oil off overnight as well, as there seems to be a bit of a supply in stock in the crude oil inventories that were pre-released during yesterday. And that's it. It's a very quick one today because simply we're just waiting for these CPI numbers. So expect the markets to be very, very quiet after the initial opening salvo at 8 a.m. After that, the market is going to be very sideways, as it has been for the last 2 days. Okay, that's it for this one. Let's see what happens at 1:30. And as ever, thanks for watching. See you in the next one.